All right. Hey, everybody. Good day to you. This is your market bias update report for Sunday, February 11th. Futures trading has been open for about an hour and a half now. Everything has been moving higher for the most part in terms of the four major indexes. But to me, this looks overextended. This looks like we need to take some time off. I've been saying that for the last 2 weeks now, basically. And I'm going to continue to say that until we get a good pattern that resets the risk to reward profile for this. So anyways, S&P for now, looking up. RSI is overextended and actually continuing to set a series of lower highs here, which is considered divergence against the bullish price action. And similar, we have, at least so far, a higher pivot high back in the mid-December range from last year and are struggling to put that in. It looks to me like the momentum here between this potential pivot where we are and the last one is obviously slowed and might roll over. So I'm looking at this MACD this week and watching for a rollover to confirm a lower pivot high somewhere in this range on the MACD to signal potentially that we will get that pullback that I have been wanting and anticipating. If we go out to the NASDAQ, pretty much the exact same story. We did actually get a lower pivot high here, and whether or not we break back above that is going to be kind of the sign to me of whether or not to stay bullish or to potentially take profit on things and sit sideline and wait for a retest, probably back down to the 50-period moving average. It has been quite a while. We really have to go back until like November is the last time that we hit the 50-period on the daily chart there, shown in pink. And I would really like to see price pull back into that level over the next week or two, give us a reset, maybe a base right there, and then allow us to break higher and move forward if this bullish trend is going to continue. Going out to the Russell is honestly the one that I have my eye on the most. It is not overextended. It has a bottoming pattern in the MACD, has room to run on its RSI. Just got volume confirmation on Friday on a nice green candle that broke out of our diagonal resistance. So the Russell looks great. I am targeting back up to 2100 and then beyond. So love the look of the Russell right now. And if we toss this out to a weekly chart just to confirm our bias, you will see that we set a really important higher pivot low right here, confirmed the smiling 200-period moving average that is curling up now, along with all of our other moving averages. And it looks like clear sailing up to that 2100 and change level. We could also target the wick high from over here at around 2137. So I am not going to be super quick to take profit at 21. I think there is a little bit of wiggle room there, especially since if we go over here, we have a bunch of these penetrating wicks, but a lot of the price action really did go all the way up to this level, kind of right in there, which corresponds a little bit more with the upper wick right there. So somewhere in this zone is where I see the next move going on the Russell. And I am interested in actively playing that on this week's trading. This is going to be a major focus for me this week trading. Going out to crude light continuing to fight the good fight. Been a little choppy here the last couple of days, especially on the intraday, but setting up a nice breakout of the 20-period moving average potentially, currently at 77.43. Quick, easy target up to previous pivot high here. And above that, we really don't have a whole lot. There's a little bit at 80, but I would actually probably be looking at this as confirmation of a new bullish trend starting and looking for a longer time frame play on oil if it is able to get back above these moving averages here, especially on the weekly chart. So if we clear 77.29 on the weekly, and on the daily, if we clear the 77.43, which is just above that, so really coming out and clearing all of these alerts and then just resetting one right here. If oil clears and gets above that with a little bit of an ATR buffer, I'm going to be really interested in playing the upside on a long-term time frame. Popping out to Bitcoin really quick. Bitcoin woke up. Everyone in the technical world of analysis was debating whether or not this right here was going to be a lower pivot high and lower pivot low coming off of this high price right there at 49,435, and whether or not this was kind of the start to a bearish correction, or whether or not this was considered a higher pivot low, higher pivot high, and the start of a new trend. Just because of the backdrop of Bitcoin, the supply and demand story, the spot ETF story, I was very firmly in the this is a breakout candidate, and played a couple of day trades in here, made a few $1,000 in trades that I was only in for 10, 15, 20 minutes. Had I wanted to carry the overnight risk and over weekend risk, I could have smashed quite a considerable gain on that. But I am happy with just pocketing a few $1,000s for an hour or two worth of work there, and then waiting for this to reset, either with a base here giving us, some kind of inside range just below the final high price there, and let's just call it 47,500. So somewhere within this range, if we get a nice tight base and then a breakout above that all-time high, I would love to play that. I don't know if we're going to get that or not, honestly. Bitcoin is the kind of thing that when it gets momentum, it just runs, and you have to be very quick on your triggers, which makes it hard to figure out your risk profile, especially since we have now gone several $1,000s, $5,000 since the last real breakout place. So you'd either have to bar by bar this, putting your stop underneath the daily candle and then just chasing it up at the end of each day, or have a massive risk profile if you were doing futures trading, which is just not in the cards. In terms of targeting, tossing this out, I don't see any reason that would stop us from coming back out to the candle high over here at 53,125. So let's just call that 53,000. We could honestly be there by the end of the week. Depends on if we get a little bit of a consolidation or a little bit of a pullback or not on the daily chart. But to me, this weekly chart looks like it is just now really waking up. This would be wave 1 of Elliott wave theory. Wave 2 for the correction. We're in wave 3 right now, hopefully targeting up to that 53,000 mark. Wave 4 would be the pullback from there. And then wave 5 would probably bring us back up into the neighborhood of 60,000 and or all-time highs, depending on how the momentum plays out on that. So I am honestly anticipating we are going to be talking about Bitcoin back pushing up into the 60, 65,000, 70,000 range here, testing all-time highs pretty dang quickly. Within the next few weeks, honestly, I am anticipating, based on the current chart and what I'm seeing in the current chart, that we are going to be testing that upper range. That said, I would absolutely love to see this diagonal support line get tested again. If we do get a little bit of a pullback here for the next 2-3 days, somewhere in there, hold support and then move, that would be an ideal entry for this position. Give us a little bit of risk for a huge amount of gain. But anyways, you can tell I am really interested in this chart and how it develops. And similarly, going out to Ethereum, let's toss this out onto the 3-year weekly chart as well. And you can see Ethereum is just still finally kind of waking up, has a little bit of work to do. But I don't see any reason that this won't get back to the 3,000 to 3,500 range within the next few months as well, as long as Bitcoin cooperates. They tend to trade hand in hand. And when Bitcoin does well, the overall crypto space tends to do well. And, I don't really see anything on the chart technically that would tell me that this bullish move is over. If anything, we might get a little consolidation. But I see the price going up over the next few weeks to a couple of months, and going into the halving event for Bitcoin, which is set to take place sometime in April, most likely. So anyways, very bullish on those two. If we go out to gold, gold not doing anything wrong, but it's not doing anything to particularly interest me. So I'm going to keep this nice and short. Potentially trying to roll over here on the very short term on the daily chart here. Not super eager to make a trade here either direction, honestly. I could see this going either way, breaking down below the 2031 level or getting back above and sustaining a run back to test highs. If it gets back above 2053, 2054, somewhere right in there. but I think there are better areas of the market to put our money to work. So I'm not particularly interested in this. Going out to copper. Copper has just been getting murdered the last 7, 8 trading sessions, and I don't see any reason that is going to slow down. In fact, if we take this out to a weekly chart, the MACD is rolling over bearish. The RSI is basically in neutral territory, but the chart has just broken down and gotten underneath all of its moving averages here on the weekly chart. And that is not a particularly good look. So for me to get interested in copper to the bullish side, again, it has some serious work cut out for it. And really, I would need to see it clear this diagonal line right there. So I'm going to actually just set myself an alert if the chart platform will let me. No, it is not going to let me. Nope, won't let me. Every once in a while, TOS has these little things where it gets quirky with me and won't let me add a specific alert to a drawing. So instead, I'll just put in a horizontal alert there and try again after I reset my platform. But I see this most likely moving back down to retest the lows back in this range. And then if that breaks, coming back down to around the 3.2 level and trying to form some support there, but not a good look on copper. Going out to natural gas, speaking of not good look, wow. Also really gnarly break of all of its moving averages, break of long-term support from back here in March of last year. If we drop this to a daily chart, there is just nothing good to say about this chart. The only trade that I might see on this is if it just gets so incredibly overextended to the downside that it is just a no-brainer for a pickup. But we'd have to go back quite a ways. And actually, let me switch over to a different chart setting here to see that. So really going out 5-year low to like 144, somewhere in there. If it gets down to that 144 level, I might be interested in getting a snapback bid back into the previous support there, but not a good look. Going out to palladium, it's also just been getting smacked recently. Had a really clean opportunity to try to have a double bottom here with support build around 960. We broke out of all of our diagonal resistance, looked great, and then just could not hold and got smoked. And a lot of this negative pressure that we're seeing on copper, that we're seeing on natural gas, that we're seeing here on palladium, that we're also seeing here on platinum, all of this is basically related to the move in the US dollar. So the dollar had gapped down, equities were real happy, but ever since then, we've just been on this solid upward grind. And this has started putting pressure on those commodities again. So you can see as the dollar kind of grinds higher, we get these kind of grind lower on the same time frame on a lot of these commodities. So not super interested in those until we see a topping pattern in the US dollar and see this thing break that diagonal line and start to head lower again. So that might take a little while. Going out to silver just real quick, since we talked about gold. Nice little potential bottoming pattern here. We got a little bit of a double tap on support around 22.15. That is also lining up with a little bit of a diagonal resistance, touching this wick low back from October of last year. Not super interested in it unless it can clear and close back above its 20-period moving average set here in blue. So that is 23,384. If we can get back above that level, I might be interested in playing to the upside, but until then, not super interested in it. I wouldn't fault anybody from playing a tight trigger on the daily here, breaking above, let's say, 22.81 or 82, just to give a little bit of confirmation there, and targeting back up here to the previous high. If you believe this is a double bottom and want to get an aggressive early entry, but you would have to have a tight stop on this, probably stopping today's candle low. Before we wrap up, let's go out to our market internals real quick. You can see on the market internals, we are still staying bullish. We had a couple of days here that were in the neutral and slightly bearish range, but didn't hold. broke back into the bullish territory. Anything above this 50 line is considered bullish. And we need to see 2 consecutive closes below -50 for this to turn bearish as a market indicator. So anyways, it is saying stay long, stay bullish, and keep doing what we've been doing over the last few weeks, just continuing to hit the market whenever we see opportunities. So before we wrap up, let's just talk about seasonality really quick. And some traders really like seasonality and some think it's hogwash. I'll let you decide. But if you average out the 20-year performance of the S&P 500 and look at what it typically does from month per month perspective, this is kind of that averaging of each month. And right now we are in mid-February. It's February 11th. We are going to be in this week from the 11th until the 17th. So, we're basically right here, and seasonality would say that we are due for a pullback. Well, if we go back out to the S&P 500 chart and we see that we are incredibly overextended, what have I been calling for 2 weeks now? Saying we need a pullback, right? So seasonality is lining up quite well with that. Typically, we get a pullback that comes back in somewhere around the early February to late January lows. So going back down to that area of the market is typical. And then from there, we usually have one of the biggest bullish runs of the entire year come in March, April, and early May. So that is what I am looking for, not only because of the seasonality chart, but because of what we see in the S&P and the need for a pullback to reset these charts. Finally, let's go out and look at our heat map. This is looking at the 1-week performance from last week and shows green kind of scattered across the board. Obviously, big moves in some of the major tech sectors that are holding the market up and continuing to push the market higher, but also seeing broadening out. A few weeks back, we were not seeing this much green spread out. The green was almost all in technology and communications and consumer cyclicals. But now we're seeing green spread out across the board for the most part. And so I like that widening perspective. It means the bottom of the market that has not participated in these upward movements that we've had over the last month or two are now starting to come online and starting to make moves. And since the upper end of the chart, the companies like Google and Nvidia and Avgo and Microsoft are all pushing their all-time highs and probably need to take a breather. Now, whether or not we get that major pullback or not, I'm not expecting it to be major if the rest of the market can start picking up and pulling some of the slack left by some of these major players as they cool off and go sideways or pull back a little bit and give other stocks in other sectors the area to play some catch up. That is also one of the reasons that I absolutely love the Russell 2000 going into the next couple of weeks here. Finally, let's just go out real quick and look at our Forex factory and look at the economic data coming our way for this week. Monday, nothing really of interest to us. Wednesday, nothing of interest to us. On Tuesday, we are going to have our CPI data, month over month, year over year, and core CPI. That'll all be very important to the market. Thursday, we have our retail sales, Empire State Manufacturing Index, and unemployment claims that are going to be important. And then Friday, we close it out with PPI data and the preliminary UOM consumer sentiment data. So nothing Monday, nothing Wednesday, and a decently heavy week Tuesday, Thursday, and Friday. So just make sure that whatever trades you have stop losses in place and you are potentially reducing your position size as we go into those events if you are expecting any volatility from them. So as always, guys, trade safe. Hit me up in the comments. Let me know if you have any questions. Let me know if this is helpful to you. And until next week, enjoy the trading week ahead.